Hello all traders and welcome to our monthly visit to the NFPs. So this payroll is the first of 2021 and the last while under the Trump regime, more importantly. So very interesting to see how 2021 or how Q1 in general is going to start and what potentials and what opportunities we're going to have going into a new Biden regime. So just to kick off the webinar, first of all, I just want to introduce myself for those who do not know me. My name is David Kindley, and this webinar is brought to you on behalf of Orbex. So these are my usual ways of contacting me. I'm always available for any questions or any chats about the market, anything interesting that you want to contact me about. I am always available, or I'll get back to you as soon as possible. So as we usually do, let's just go into a quick risk disclaimer first of all. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivative trade is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose for the purchase or sale of any commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy of completeness of any information or analysts supplied. So let's just take a quick look at the analyst expectations for this NFP. So like we said before, with Biden taking the seat in the Oval Office, will the Fed raise rates sooner rather than later? And also what will happen to inflation during the first quarter of the year as well? These topics will be highly talked about as the inauguration comes in a couple of weeks' time. And Trump has said there's going to be a smooth transition. Hopefully there won't be any more drama unfolding like they did do a couple of days ago at Congress, and it will be just a formality when Biden does get inaugurated in, I believe it's the 20th of January, a couple of Wednesdays away. So, obviously the immediate impact of Joe Biden becoming president is that the new administration will unveil a large stimulus package. I mean, this has been written for a while. The Democrats control most of the House now, the Congress as well as the Senate. So it's going to be a lot more easier to pass a lot of these bills once, House Speaker Pelosi has her meetings with the Biden regime. So Democrats have already lined a package worth trillions of dollars to help support the economy, and it includes billions of dollars to households and states and local governments. So let's just take a quick look again. So analysts expect a decrease from 245,000 to 112,000. So if we take a look on the chart here, we can see that since the economic downturn of the first lockdown, the first wave of the coronavirus, we've seen the steady upturn, and this was the record amount of jobs that was added to the American employment system. Since then, as you can see, there's been a steady downturn. Obviously, numbers are still in the positive, thankfully, but this is the first time since the pickup that we've seen numbers so close to the negative territory. So this is a little bit concerning going into, it'll be going into February now, and also the first full month that Biden will be in office. So importantly, jobless claims remain below the 1 million bracket at 787,000 and above market expectations of 800,000. But the problem with this is that job numbers are still relatively quite high. It's still a cause for concern because these figures are still very high for jobless claims. Even though we are pushing away from the 1 million bracket, it was hovering around the 1 million bracket for most of the summer. And we started to pull away from it in September, October and November. And obviously now we're pulling further away from it. But, it still is a bit of a cause for concern. And also ADP figures as well, private jobs, the private sector jobs, private businesses, unexpectedly laid off 123,000 workers in December compared to market forecasts of an increase in that figure. So that's quite concerning as well. It's the first decline in the private sector employment since April amid a rise in COVID infections and further lockdowns. So, the obvious industries and services that were being affected mostly were hospitality, trade, transportation. So these things are obviously logically going to be impacted with further lockdowns, further restrictions. Obviously, it's not just America, it's across Europe as well and most of the world. So, but obviously we're focusing more on America now. But we'll have to wait and see how that's going to really start moving as we get into Q1 as well. So let's just continue with the presentation and going on to the last part of the analyst expectations. So we've got they're less optimistic at 6.8%, but that's not really much for an employment rate. The projected is 6.7. Sorry, the last time is last year. Last month, sorry, was 6.7. Now it's 6.8. So it's not really too much in the way of a differential there. So won't really be too concerning. The main thing is the job figures. I mean, it's going down to zero nearly as we looked on the previous chart. The only good thing is our earnings are slightly up and wages are slightly up. But in this economic climate, we'll have to wait and see if this is going to be very concerning or not. The latest CPI inflation as well was unchanged at 1.2%, so the same as the previous month, and that beat expectations at 1.1%. But again, since we've seen this downturn here going close to zero for inflation, are we going to start picking up under a Biden regime? Obviously, he's got a lot to take into account in his first few months in office. Usually with a new president, they usually go the first 100 days is quite important for the president, and a lot of analysts and investors look at what the new president has done in the first 100 days, like they did with Donald Trump. So Donald Trump changed a lot of the tariffs. He changed a lot of the previous Obama regime. So we'll have to wait and see if this regime that Biden's going to be stepping into is not just going to be a recycled Obama regime. He has to make it his own. Obviously, he was Obama's number 2 for 8 years when Obama was elected in 2008. And, he was given a few challenges to undertake, but it wasn't really a roller coaster ride for Joe Biden being the vice president. But now he is president. We'll have to wait and see what his main tariffs will be and his main accomplishments will be as well. So let's just look at the economic indicators, why they can help and what are they. So lagging ISM manufacturing and services, challenger job cuts and jobless claims, ADP non-farm employment reports, and consumer confidence by the University of Michigan, as well as other factors as well. So obviously we've seen in the last few months that manufacturing has picked up slightly, but then in the next months we've seen it go down as well. So these are very, very choppy times for not only manufacturing but services industries as well. We've got jobless claims, like I just mentioned. They are steadily coming down, but there's still a very, very high amount of jobless claims every month and every week coming out of the American data report. ADP non-farm employment reports as well, like we just touched upon. Private sector data released, and that is not showing any signs of picking up as well. So obviously the longer these vaccinations take to not only get on the market but to be approved and certified, we've had Pfizer at the moment, we've also got Moderna that was recently approved, and also AstraZeneca. Johnson & Johnson are rumored to be working on their one as well, and we have to look at other pharmaceutical companies that might want to get into the mix because it is a big industry and big business as well. So the quicker that these rollouts can happen, the better. We've seen from the UK that the vaccination rollout hasn't really gone down and happened as quickly as what it was supposed to. There are a lot of complaints at the moment. Only a certain amount of people have had the first dosage, and obviously 2 doses are needed for the Pfizer vaccination. So these are just things to pick up on and to see where sentiment is going to lie going forward as well. So we look at also for the leading Treasury yields, oil prices and indices with equities. Obviously, Treasury yields will be interesting to look forward to in Q1 if they're going to go up as well. Equities, soaring sky high at the moment, record highs for equities, open and closing at the moment. Obviously, there could be a sell-off at some point, as there has done in the past, but at the moment it seems to be forever rising. And oil as well, we'll touch $51 a barrel today, 50 yesterday. So as you can probably tell, oil doesn't really have any reason to slow down at the moment. It's got very good, it's been very buoyed with the sentiment really at the fact that there's going to be a lot more vaccinations this year, and maybe the transportation industry in general, as well as the tourism industry, will start taking off literally in the middle of the year. So it'll just be perfect for a lot of summertime holidays, traveling, etc. This can all get back to normal should we get some positive data on the vaccination process. So these are just some of the reviews that I've been just having a look at. So the last round of data, the pros and cons, and the forecast and the previous. So we've got a few more cons than we have pros at the moment. The main pros are at the bottom with the leading indicators, Treasury, equity, and crude oil. We all know that these are vastly up from where they were a couple of months ago. And also, you have manufacturing, but this is a bit of a hit and miss, like I just said. We're just looking to see what's going to happen with further manufacturing, especially as a new Biden regime kicks into force. But it's not necessarily something that's going to change overnight. The main thing that's going to change the manufacturing industries or jobless claims, private businesses, etc., is the fact that if people can actually go back to work, maybe the jobs are there, but there's not enough people to fill the jobs at the moment because there's so many more lockdowns expected and stricter measures coming into force. So we'll see what happens with that as well. So choosing the best pair to trade, we just look at what the current rates are. They remain unchanged, but is this going to stay the same in the next few months as we go into Q1 and as we exit Q1 as well? So these are something to keep in mind, and also choosing the best currency to trade as well. So at the moment, updated this about 10 minutes ago. So the dollar is making a little bit of a comeback in the last 48 hours. If you check the US the US index in the last 48 hours, it is actually pushing to the 90 level. It might have pushed past that by now. We've had multi-year lows for the greenback, so we are looking now to see if the pound and the euro are still going to keep eclipsing and pushing their own currencies higher and higher. So at the moment, the euro is looking a little bit bleak, but it had a bit of a downturn in the last 24 hours. But all in all, pushing up to the mid 120s to the high 120s was very significant. The pound as well over the dollar, that was quite significant as well. With the Brexit embargo finally coming to an end, we'll have to wait and see if that's going to be detrimental for the UK. UK have got a very close tie with America, so we're going to have to see if that comes into fruition. There's also, there's already complaints at the ports getting into the UK and coming out of the UK that there's delays, vast delays on deliveries and supplies. So, we'll have to keep an eye on the pound and the dollar as well in the near term to see if that's going to start pushing downwards and if there's going to be a bit of a sell-off and we get back to the low 130 region on the pound dollar as well. Aussie, on the other hand, is looking quite good as well. We've had some good news over the Aussie recently, as well as Canada. We'll have to look on the oil imports and exports, so the oil exports as well, to see if this commodity currency is going to take shape as well. So dollar CAD is very, very interesting because usually when the non-farm payrolls are out, we've got Canadian unemployment news as well, as is the case with today. So just certain things to look out for if we do get some positive data from America. But as I said, the expectations are that it's going to be less than last month. So we're looking at a weak dollar at the moment. So euro, pound, Aussie, Swiss against the dollar. To go against it would be a good trade at the moment. To put in sell and buy limits or any pending orders that you are comfortable with. So these are very, very good examples of the best pairs to trade at the moment. So just go on to the final part of the presentation at the moment. So just a few things that I like to go over every month. How to protect your risk capital, because it's more important that you find trading to be fun rather than to be a chore, and obviously to leave your emotions at the door as well. So avoid trading during the NFP as volatility is high and the effect could lead to losses that exceed profits. So this is just a standard one that we always want to put on the first point, to say that the NFP can be enjoyable to trade because it's fast paced, very high high action and everything like that. However, it does come with its own risks, and these can obviously be avoided if you don't trade it. So just something to keep in mind there. Also, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. So like I just touched upon recently, leave your emotions at the door if you can. There's no reason to get into a trade and start maybe losing your own rhythm and using your own way of trading, your own style. Once that goes out the window, then it's very difficult to get back and keep your emotions in check as well. So take profits and stop losses are there just to make sure that, you don't want to take home any further losses than what you want. And also you don't want to take home any further profits and risk any more funds. If there's a good profit to be made, close the trade, get out of the market, and enjoy the rest of your day basically. Number 3, close out all positions, if any, ahead of the release in an attempt to divert from high volatility and range risk. So as I said, as we approach the NFP, which is happening in just under 15 minutes, if you've got any open trades on any big forex pairs such as the euro dollar, pound dollar, etc., then if you don't want to get involved in this kind of trading, then make sure that your positions are firmly closed out on your terminal window. And then hedging is always good. Number 4, hedge your positions. You can, in case your risk is minimum, if you're trading long term and the stop loss is far away from being hit. So hedging is always a good strategy, but just be careful how you use the strategy itself and just make sure that the risk ratio is worth it as well. If you're eager to trade despite the warnings, do let the markets calm down before entering a trade. So, like we just touched upon on probably point number 3, you don't want to get into a heated environment. And also, when the market is still noisy, even after the NFP, there are still ripple effects of news coming out. So, the NFP is usually at half past the hour, and up until the end of the first hour you can still get ripple effects going on for the NFP as well, or any high impact fundamental news release that is going on as well. So number 6, analyze the data post release, which is what we're doing now, which is very, very good, without supporting employment, wage and unemployment data. So despite the NFP is over, as post-effectual bias depends on all 3. So it doesn't really matter even pre-data, pre-news, it's also post-data as well. And then pay attention to the divergence between actual and consensus. So gaps of 20 to 30K are not considered much effective. So for example, the prediction is 265,000 this month. If it comes in at 260, there's not really much of a gap or nothing to shout about basically. So there won't probably be much of a market move, maybe 20-30 pips when you have something, when you've got a big volume basically, is not really much to shout about. If it starts driving 50 to 100 pips, then yes, it might be very, very good to put in those trades. So the divergence is very interesting to note if it does become a very big NFP. At the moment, in the last few trading sessions, it's become a bit of a non-performing payroll, and it's been a bit disappointing for the last few NFPs, going into Q4 and even Q3 of last year. So we're looking to see if this is going to be anything different. If there is a bit of a shock and jobless figures, the NFP figures come in further to negative territory, then we should expect a big shift on the price action. And it's always good to obviously having your pending orders, but also on the opening and the close, meaning the take profits and the stop losses as well. So just something to look into as well as we go into the last 10 minutes of the presentation. So let's just that's the end of the presentation formally. Now, what I like to do is just get a basket of currencies that I have been looking at recently. And so I've got the euro dollar, dollar yen, Dow Jones, gold, Aussie, pound, and CAD. So these are all important for me because when it comes to big fundamental news releases, I like to make sure that I've got everything covered. And in this case, I have done. Well, I like to think I have anyway. So we'll look at the euro dollar first of all today. I'll just bring it a little bit more. So what we've got at the moment is, it's trading at the low 122s, and after the big push that we had recently, prices are starting to wane. We had a very strong dollar in the last 48 hours, so this is probably one of the reasons why a lot of the currencies have sort of started slipping against the dollar, and the euro and the pound for that matter are no exception. So now at the moment we're just looking to see what the potentials are. So we've got almost these levels here. So I mean, looking on the basis of things, we're looking at a weak dollar. Let's make no bones about it. It's supposed to be a bit more of a detrimental NFP than usual. So we're just going to see if prices start pushing up to this choppy areas here. As you can see, we've had some choppiness. I'll just zoom in a little bit better for you. We've had some choppiness here on these levels at the high 122, possibly having an attempt at the 122.8, but I don't see it going any higher if we don't get a good, well, if we get a bad jobs report, sorry. So we can start pushing up, and euro dollar probably looking at 122.80, which would be my first target here. If we do get a decent NFP and sentiment shifts to the other direction, then we could see today's gains be erased. So I'll be looking at the bottom today at the lower 122 range. So just that's for euro dollar. Just have a quick look on pound dollar as well, just to open that up a bit. So we've got here again, so we had a bit of a detrimental downturn with the dollar recently, but the pound dollar has been steadily trying to claw its way back, and we're seeing that we're getting a bit of resistance around this area here. So it's at the 136 round figure. So this will be something else to take into account when we're going to see what's going to happen with the NFP. Again, today's gains could be erased in a couple of minutes if the potentials are there for a good dollar outcome. So this false spike here, roughly about the 135.500s, so 135.50s, will be somewhere where I'll be probably putting a stop loss if I'm taking out a buy position as well. Gold, on the other hand, has been very, very hectic, let's say, in the last few trading sessions. Very, very exciting though. We're seeing gold now in the last few hours start crashing through the 119 handle, and sorry, the 1900 handle, and this is very significant as well as we go into the NFP. Very, very, gold is a bit risky at the moment because a lot of traders are looking to see if there's going to be vaccination progress, if there's going to be more stimulus injected into the economy. So with vaccination headlines comes the risk on, risk off sentiment. At the moment, you can see sentiment is against the gold. It's starting to start crashing down even further. So if we take a daily chart at the moment, you can see it's erased all those gains from the back end of last year, and now we're starting to push down. So I'd say about the 1867, which I've marked previously, would be quite a good take profit if I'm on a sell position at the moment. That I've actually started opening sell positions in the last couple of days because there was a big risk that oil would start tanking, which it has done. Sorry, gold would start tanking, which it has done. Oil, on the other hand, is a different story. So dollar yen as well, bit of quite a serious consolidation there. Not really going to put any Fibonacci figures in or levels here at the moment. I'm just going to wait to see if it starts breaking out of the obvious channels. So this is one of the obvious ones here, roughly about the high 103. I don't believe it's going to go lower than 103.50, so that would be quite significant to see and to double check as well. So just waiting to see what's going on at the moment. Let's just take a quick look at the Dow as well. The Dow was very, very influential in the last 48 hours as well, closing at record highs. Very, very significant, unbelievable really, what has actually been going on and what the potentials are with the US indices as well. So we're just waiting to see if it's going to keep on climbing, keep on pushing as well, which will be very, very interesting, because the Dow obviously follows the Nasdaq and the S&P when it's starting to project and to start pushing higher and higher. So we're just seeing what's going to happen in the next few minutes as we approach the time that we need. And also, let's just take a look on dollar CAD. We said before about dollar CAD, very, very choppy, but as with oil pushing higher as well, we've seen that there's been a bit of an economic upturn in the Canadian dollar, but just in the last 24 hours with the strong greenback that has been apparent, we're just waiting to see now what the potentials are for the dollar CAD. So again, I'm seeing a lot of good support here. But if it starts erasing the gains when the reports are out, especially with the Canadian news as well, then we could see prices start falling further downwards, which will be quite significant. So possibly down to the 126.70 region that I'll be looking for to put in some trades. Again here, as you can see, I'll just zoom in a little bit more. As you can see here, nice double top forming, and it could even be a triple top. We've got here a 127 round, which is a nice psychological figure. So possibly I'll be looking to see if it breaks the 127. I don't see why it can't go further and start pushing higher to these levels here, about a 127.3. So that's about 30 pips, depending, excuse me, depending on the volume. It could be a nice little trade to open and close within the first 5 minutes of the NFP data release. So just waiting to see what the results are coming out of that. And then we've got Aussie as well. Looking at Aussie, in the last few trading sessions, we've seen quite an ascent in the Aussie, but there's always room for a pullback, and this is what I'm expecting in the next few trading sessions at least. This is the 0.7750, the mid 77 cents. So with that, I'm just looking to see if it's going to start delving deeper into the market. If not, we've got some nice tests here at the high end of the 77 cents and then moving up to 78, which is roughly about this level. So, there's no reason why it can't get any further higher than that in the next few trading sessions, or even in the next hour after the NFP. So let's just take a look at the euro dollar once again. Very, very intriguing, because we've had this, consolidation and then a dip, and now prices are starting to pick up. We had this big dip here as well, with this strong greenback in the last 48 hours from yesterday's trading session, well, the European trading session that is anyway. So as you can see, very, very, where the price is now, this is where the channel of consolidation was really taking hold. It dipped out a little bit, pushed back in, but now it's firmly flattened outwards. So if we can get back in this area here, I'd be expecting it to start pushing even higher, but it just had to get past the the high end of the 122 at the moment. So we'll just see what the figures are. So I'll put it down to a 30-minute chart. I don't want to go any lower at the moment, because if you get into 5 minutes or 15 minutes, it can get a little bit overwhelming. So I just want to pull it out a little bit. 30 minutes is fine that I usually have a look with the charts. 1 hour is a little bit too much, especially for the NFP. So we're just seeing what the potentials are at the moment. So Dow, like I said before, very strong in the last 48 hours. We're just waiting to see now if it's going to start eclipsing upwards and moving higher if possible. So, with fiscal stimulus imminent from the Biden regime, the stocks and indices should start pushing, will most probably keep pushing higher. They'll only probably start falling if we don't get the expected amount of stimulus injected into the American market. But as I said before, with the Democrats controlling, the Senate now and the Congress, then House Speaker Pelosi will have no problems in pushing for further stimulus and the continued stimulus as well. So almost time for the NFP. Just a few more moments and then we should get some data coming through, which will be quite significant. And we'll see if any of the levels have contributed and if we can get back up to where we want to go. So here we go, market starts moving now. And as you can see, it's already becoming a bit apparent that it's bad data for America, or a little bit detrimental, let's say. So we've seen the euro dollar start pushing higher. I'm just waiting for the actual figures to be released and to be confirmed as well. So we've got up to 120 to 50, going up to 60 at the moment. So just going to see if that's going to start pushing higher as the data starts coming in. So now we're starting to go the other way. So just waiting to see again what the data is, just filtering through at the moment as the markets start picking up. So already we've got roughly about a 10 pip move. Nothing too significant at the moment, as we just waiting on the data coming through shortly. So yeah, market's not really moving too much at the moment. So the December jobs report is in, and we're just waiting for the official figures now. Sorry to keep you all in suspense. So average hourly earnings have risen to 5.1% versus a year ago, which is quite good for those people that have been able to stay in employment or found new employment. So we've seen a bit of a boost on the dollar pairs at the moment. It just hopefully see if it can continue. As I say, it's only 10 pips at the moment. So US payrolls decreased 140,000 and the estimation, well, below estimation. So 140,000 for the payrolls has decreased, so not very good for the American economy, but not so significant. 140,000 out of the population that they have that's currently in employment at the moment. So again, we've had a bit of a spike on the euro dollar. We've had more of a movement on the dollar CAD. So payrolls fall 140,000. We're just waiting to see now what's actually going to happen in the next few minutes, and we'll see now. I'm getting some alerts as well everywhere to keep me informed. So again, at the moment, we've seen a bit of a non-performer. Just going around the board now. So we've got pound dollar, which has probably moved. It spiked lower, but now it seems to have retraced almost straight away. Spiked almost 20 pips, but now we're moving back to where we were before. Employment rate unchanged at 6.7%. Estimation was 6.8%. So like I said in the presentation, it's not really that significant that, from 6.8 to 6.7%, it was never going to be something that was going to be really cheered upon in the market. So the dollar CAD is the main mover. We'll have to find out the Canadian employment data as well. This has probably been detrimental for Canada since the dollar CAD is moving upwards, but only by 15 pips. So, excuse me. So it's not really something to get our teeth sunk into at the moment. And we're looking now just to see how far the euro dollar and the dollar yen can move. Number of US permanent job losers at 3.37 million after 3.72 million. So small number in that case as well, or nothing too significant. The 10-year yields have gone down slightly as well. So not much move on gold. Wasn't really expecting too much at the moment. We've seen a bit of a downturn, but not really something again to shout about. We're just looking now to see if gold is still going to start moving downwards. I'll bring it up a little bit, put into the 4-hour chart. I mean, I'm looking at this level here that I put in before at the lowest that it can go today. So it's still got room for another $20 to move, which again will be quite significant, because if you can see, we're going back to recent lows at the end of December. So, you know, two or three week lows for gold after its initial comeback. So, you know, headlines on gold are basically affected by the risk on sentiment, which is incumbent to the vaccination progress as well. So just things to look out for in the headlines. So we've finally got all the data that we need. Let's just take a quick look as we come to the back end of the presentation for the NFP. So we're 5 minutes after the NFP now. Excuse me. As usual, well, I'm saying as usual, in the last few NFPs, we've had quite a few spikes in the market, but then there's been a heavy retracement and markets have plateaued. So I was hoping a little bit differently for this time, something that we can really look at and get our levels correct and have a look at the opportunities that there are in the market. But at the moment, it's not really looking all that good for traders in general. The market's not especially moving. I mean, we've got a $20 range, and now we're just seeing that, you know, 2-3 pip move in the first half an hour is nothing really, well, in the first 5 minutes, sorry. So let's bring this down to 5. So as you can see, very big spike. Now it's retracing. So we're just going to see in the next 5 minutes if anything else is worth of note going into the back end of the NFP. So, you know, this last week or so has been very traumatic for a lot of investors and traders. So most of the time, if there's been quite a heavy week, a heavy burden for the markets, then traders usually take their weekends early. And in doing so, then the market goes a bit flat for the rest of the trading day up until the market close, and we probably won't see much more action. But we live in hope that something significant will get our juices flowing, our appetites going. So let's see again what the pound is doing for us at the moment. So again, like I said, a bit of resistance up here. The 136 round was probably quite a far stretch for the pound dollar to be making. We've seen a bit more of a downturn in the last 5 minutes, but now we're going to see what's going to happen in the next 5 minutes as well. So let's take a look on. So we've got about 25 pips more that we can probably get into, and we can see if we can get any more of a movement to the downside, and we'll see what will happen there as well. I'm just checking some other levels as well as we go close out the first 10 minutes after the NFP. So usually the first 5 minutes, it's the roller coaster ride on will it, won't it, go up or down. And then we've got at the end of the 10 minutes, we come to see if any of the trades are going to start closing that have been opened during the NFP as well. So this will give us quite a big move if there's going to be any kind of significant sell-off as well. So looking at that at the moment, as you can see, we've had the spikes down on the pound and the euro, but we're just waiting to see if the market's going to turn out any lower. My gold trade at the moment is doing quite well. As I said, I'm going to keep it on a sell position and start pushing down to roughly the high end of the 1,870 and going into the mid 1,860 range. So that's going to be quite significant for myself and other traders that are on board as well. Dollar CAD as well, as you can see, during this brief period, I'll just bring that down on the 15-minute chart so it's a bit easier to see. We've got these nice test levels here. Again, I'll be looking to see if it's going to break any of these. If it does, then we're going to start moving up higher. At the moment though, again, like most of the currencies, it's ranging, it's flat, it's plateauing. So we're just going to see if that's going to start giving us anything to shout about in the next few moments. Also, the euro dollar now, I think it's looking like traders are seeing that the news from the NFP was not very good for the American economy, and the euro dollar itself, it will start pushing upwards now. So we've got the obvious first target here of the 122.62, and now we're going to start pushing higher. If it reaches that, I expect at the 122.800, like the level that I put in before. So again, just waiting to see if that's going to take shape in the next 5 or 10 minutes. As you can see, we're pushing higher now. Excuse me. And also with the pound as well. So we've broken this target here. And now we're just going to start looking to see if it's going to start pushing higher. So, you know, euro dollar, pound dollar, before the NFP data was released, it was supposed to be quite detrimental for dollar. We've had our little spike in the first 5 minutes, the little ripple effect. Now we're seeing traders really put in their bets and obviously the bulls have entered the market now, and we're pushing higher on both counts. So at the moment, I'll just be looking to see how far it can go. I'll be putting in a stop loss at these periods here on my buy positions, and I'll wait to see those come into fruition. So very, very good trades at the moment. So just a little note that when you're trading the NFP or something very, very significant in the market, just make sure that you've got all your data. Like I went through with the NFP analyst expectations, the expectations were supposed to be a bit more detrimental than last month's job report. So with that being said, we're now looking to see on that expectation, naturally, that there'll be a weak dollar when the NFP is really in full swing. Now it's in full swing. We're entering the first 15 minutes of the post data, and we can see that obviously the markets are moving to where we wanted them to be. So this is quite significant as well. So it's just about getting more comfortable with your own trading style. Obviously, we're here every month to do the NFP to give our traders a good insight on what to look for, where to go, and what trades to open and close, what pairs to trade as well. Not even pairs, even commodities, indices, etc. Excuse me. So this is just a small caption of how we can help traders as well going into the NFP releases especially, and how we can jump on certain trades and make them more beneficial for us as well. So every month obviously we are here, and we'll be here again next month to do the same thing, to try and look at what the best trades are to pick up. Obviously you've got a weak dollar here, and you know this will be trending across the board, especially with such a fundamental news release such as the NFP. Obviously dollar CAD is taking shape as well, pound dollar, Aussie dollar as well. So you know, everything that's got a dollar with a quote currency as a dollar, pound, Aussie, euro is going in one direction, and the base of the dollar currencies, dollar CAD and the yen, is going in the other direction. So you know, if you're looking to hedge your trades, not just on the same trade, but in other currencies, this is something that you can obviously look at as well when getting more comfortable with hedging and with putting your bets, or even short bets as well, in the market. So as we go into the final part of the presentation, just taking a quick look at the euro dollar as well, more significantly, as we try and get these tops and these resistance levels. If we can break them, then there's no reason why we can't see this downward trend turn into an upward trend as well, and we start pushing back up to the points at the higher end, or the mid end of the 123, which is very likely within the next few hours as well. And just the pound dollar as well. I'm picking up these two pairs in general because the pound has been under a lot of pressure recently with Brexit, and also with the vaccinations that have just been rolled out in the UK. And so these are the pairs that I'll be kind of looking at in the next few trading sessions as well. So again, if we can get back up to the 136, the mid 136 range, then that'll be quite significant after this detrimental downturn on the opening of the new year. So, you know, the first few trading sessions of the year are very important, but with Brexit taking shape, you know, the official divorce date of the EU and UK cutting ties, it was going to be even more, more significant, let's say, when 2021 came into effect. So just looking at the last part of the NFP webinar now. And so what I'll be looking at in the next few trading hours is how high the euro dollar and the pound dollar can go. If it's going to start pushing on to previous days levels, I've got my stop losses already in place. I'm going to keep looking at the short bets for the two currencies, and also I've got my gold trade as well in a sell position that's doing nicely. So again, I'm looking at these levels down here. I won't be expecting gold to start pushing up anytime soon. It's been very, very detrimental in the last 24, 48 hours. So we've had this sell-off recently and it's expecting to keep going, but we're going to see what headlines are over the weekend. And just remember to check your weekend gaps as well if you've got any trades open over the weekend. You know, so much news can come out in the weekend now with further vaccination news, further developments with Donald Trump and the Biden regime. Donald Trump has said he's going to go quietly now after being allowed back on Twitter, after being banned yesterday. Is he going to flare up anything else, or not just him, his protesters as well? His pro-Trump campaign is coming to an end. He's only got 2 weeks left, so this will be very, very significant. If anything else will go along until the inauguration on the 20th of January for Joe Biden. So something else to look out for as well. So that's all from the NFP for this month. Thank you very much for joining me. And if you have any comments or questions or anything at all, please feel free to add it to the post and I'll get back to you as soon as possible. Just remember to keep your trading highs open for the rest of the afternoon if you are trading, and if you do have trades open. As I said, the ripple effects can last up until a couple of hours after the NFP or any significant news event as well. So it's very important to have your eyes peeled, especially if you've got trades open in the market, to obviously combat them with good, solid take profit and stop losses, and you should be fine. Okay, so thank you very much and take care, and we'll speak again next month. All the best and bye for now.